Hello, folks. How are you doing, everybody? It's another time again we meet here, and today I will just focus on fundamental part. As a matter of fact, we are trading currencies, and as you know, that the supply is being managed by the central bank decisions. So there is a great role which is played by the central bank to address the economic performance of a state, like inducing economic policies and so far. But today here at GATOSE FX, I'll just try to reflect as what has been happening in the US economy for the month November this year, and the Fed reactions, which we have started to see how the Federal Reserve of America tries to address economic challenges by imposing different policies and decisions made by the FOMC, Federal Reserve Open Market Committee. Like to begin with, I will just take you through the most important reports, macroeconomic fundamental report for the month of November, which by fact we have seen that the strength of the dollar was weak. Now we need to understand fundamental wise why they were weak. Although when we get into the chart, we just see it is a normal monthly retracement phase. Most of the pairs of the dollar, like GBP USD, Euro USD, the pair was bullish. Like in the higher time frame, there was a retracement, but this was accompanied by fundamental factors. So we need to understand why dollar was performing weak. And of course, it's been good enough on the first of December 2023. Chairman of Federal Reserve of US, Mr. Jerome Powell, delivered his speech at a fireside chat at Spelman College, where he talked about the Fed's overview concerning the various decisions which the Fed is expecting to take through. And of course, we are anticipating to have tightened hawkish monetary policy by the Federal Reserve Decision-Making Committee, which has started to be seen. Like we have seen the report of non-farm employment and for the last month. We see NFP now became positive. We have seen even yesterday's report of inflation rate. We have seen now the inflation rate is still within the steady rate, which is economically efficient. However, so far, Mr. Powell has just addressed that he is looking to maintain inflation below 2% as the matter of year price fluctuations. Because once it remains within the range of 2% or less, it is very economical efficient. You won't find that prices are raising too much in the market. But however, so far, Mr. Powell addressed the issue of pandemic, corona pandemic crisis, how now the Fed is trying to recover the economy from the pandemic crisis. So to cut the story short, let us first go and look at the report, financial report. I just try to summarize only those news which are very much highly impact on the foreign market. It doesn't mean that other news are not economically important, but I just pick those which are very strong, and the reactions could have perhaps been seen very rapidly and quickly once these news are released. Like now you see in November, in terms of ADP, non-farm employment change, it was that since the previous report was creation of 89,000 new jobs, while the forecast was to create new 149 jobs, and the actual results was 113,000 jobs were lost. So under this circumstance, we see that now the economy performed bad, that is a bad impact the economy, and it probably make the dollar weak. Just like the manufacturing procurement index, the same, its efficiency when PMI is about 50%. But you see, the previous month it was 49%. The forecast was to remain 49%, and eventually the result was 46.7%, which is less than the previous months and less than the consensus expectations. So this is bad in terms of economic, and also it makes the dollar weak. The same, at least job loss opening was positive since the anticipation was 9.34 million people would have new opening job availability, and the results were 9.55 million new jobs were available, just because we have seen we have had a negative PMI. When we have a negative employment change. If NFP is negative, that means people have lost job. We expect that in the next coming economic month, would have just having the availability of new jobs available for people to cover. So let us look at the Fed reaction decision on interest rate. Federal Reserve Opening Market Committee decided to leave the interest rate constant as it was anticipated, like 5%, and it remained 5%. Of course, in terms of economic impact, it will just remain constant because Fed didn't want to raise interest rate, because when they are raising interest rate, that means they are going to apply hawkish monetary policy, something which I have heard that Mr. Fed has been speaking, particularly for this month. Let's go and look at his speech. I think in his speech here at page number 4, he spoke about employing tight monetary policy in order to curb for inflation. Like here, I quote, he says, inflation has declined to 3% over the 12-month ending in October, but after factoring out energy and food prices, which tend to be volatile, what we call core inflation is still 3.5%, well above our 2% objective. You understand, the objective of the US is to at least maintain 2% inflation rate. But he further said over the 6-month ending in October, core inflation ran at an annual rate of 2.5%. And while the lower inflation reading of the past few months are welcome, that progress must continue if we are to reach the 2% inflation rate objective. So this is what the Fed is looking upon. Therefore, if we look very clearly, we just have found that to cover the inflation, still Fed maintained 5.5% interest rate. Right now, even for the unemployment claim, of course, it's obvious if people lose job, they must complain. You see, the complaint were severe. Average hour earning also dropped from 0.3% to 0.2%. NFP itself was negative. New 150,000 jobs were lost compared to the anticipated amount of creating 178,000 new jobs. The Fed failed to do that. That's bad for the economy. And all of these aspects are going to make the dollar weak. That's why I was looking like, if the economy of the US is doing bad in the month November, what policies would have the Fed come for the month December in order to rectify and bring back the economy into its balance? Like we see the first Friday, once NFP was released, we have had a positive NFP. New jobs were created over and above the anticipated, as well as inflation rate. Yesterday, we have had the news of inflation rate on 12th of December, whereby it rose from 0.2 compared to previous month to 0.3%. Yes, for the monthly basis, it is good because it is still within the steady rate of inflation. It doesn't exceed 3% and it doesn't go below 0%, whereby we could have suffered with deflation issues, right? Then the essence of it remained the same as it was forecasting. It is not a big issue just because it is over and above the previous months and within the steady rate, and it has increased. That means it's going to stimulate investment. It will attract investment, which will have a multiple effect on the economy, like more production will be done, people will get new jobs, purchasing power shall rise up, and even it is going to affect the balance of trade, where we anticipate to have more export, and hence the demand of domestic currency shall flourish and dollar will become strong, right? But again, looking at employment rate, even when Mr. Powell was addressing it, because he was addressing it at Spelman College during his speech at Fireside Chat, he really tried to cite about addressing the students, like now you are about to get into the labor market, and the economy is right there to welcome them, whether for those who are looking to be employed and or those who are looking for self-employment. I can quote him. He said that, for example, I am sure that students are wondering what kind of jobs, markets, and economy you'll be entering when you complete your decision. Congress assigned the Federal Reserve to dual mandate goals of maximum employment and price stability. I remember, I repeat again, quoting him. Congress assigned the Federal Reserve to dual mandate goals of maximum employment and the price stability. Both goals are essential aspects of a healthy economy. So you can clearly see, like I normally teach through my classes, that the whole aspect of fundamental news is coming from the definition of the function of the government, which is to bring about sustainable economic development, maintaining growth while maintaining price stability, because these are the macro aspects which are very essential and important when we are addressing the performance of a state. And now you see chairman Powell try to assure the student, like now you are getting to the labor market. It's the job of the Federal Reserve to make sure they create good environment now for the labor market to open, so that new graduates could have get been hired, right? So whenever we look at PMI, even last month, we can find the same. It was weak. This was the service PMI, Procurement Manufacturing Index. Of course, it was over and above the 50%, but it dropped from 53% to 51%. It is above the average, the mean, but still it is weaker compared to consensus expectation in the previous month. So you understand, the less the procurement, the less the output, the less the export, and also the less the demand of a domestic currency. That's why in the month November, we found out that dollar was weak. Even looking at CPI of course dropped from 0.3% to 0.2%. It is weak, it is bad, but not harmful, because it is still within the steady rate, but it discourages investment. That's why you have found out that in this month now, the report of CPI, you see the inflation, the Fed tried to raise inflation up to 0.3%, which means that, as Chairman Powell spoke about, he is going to implement hawkish monetary policy, tightening monetary policy in order to curb for inflation, but as well as to promote the economy after the post-pandemic colonial era. You see so many people lost a job, and now the economy is trying to recover and get back into prosperity, right? So if you look at industrial production as well, for the November, it dropped from negative 0.6 to negative 0.4, excuse me, to negative 0.6, which was also worse. That's why I found out people have lost job. You see, there is a correlation. When you have a negative NFP, you have a negative industrial production. You will have also a negative trade balance, as well as procurement also. So these things goes together, and now it is the role of the Fed to address and come up with monetary policy that would have helped to bring back the economy into its balance. Okay. We see also we have for this is pound. I'm not talking about pound, I'm talking about dollar. Now let's come to December. We have seen all conferences, all most of the important news for the month November. They were giving us information like dollar is going to be weak, and it is clearly reflected in the chart. Go look at GU, go look at EU. All of these pair showed that the weakness of dollar was severe there. But since Powell's addressed this speech on the 1st December, and he spoke about employing hawkish monetary policy, although he quoted, he mentioned that Fed hasn't yet made a final decision whether they are going to employ dovish monetary policies or hawkish monetary policies, but they are looking to tightening the economy in order to bring back the inflation up to a rate which is economically efficient. Now we can see the first address came with an NFP. You see now there were 150 job lost for the past month. Fed expected to create a new 184,000 jobs. Look at the results, very much positive. New 199,000 jobs were created for the last non-farm employment change report. We see unemployment rate also dropped from 3.9% to 3.5%, as well as average hourly earning also increased from 0.3% to 0.4%. All of these are good for economic performance, and they are giving dollar its strength. Like even yesterday, we see the inflation rate is very economy, which is 0.3%, which is over and above the previous month, right? So addressing these things and align them with what Mr. Powell was trying to address while he was speaking live at Atlanta on the policies. I think now what I'm looking for the end of this month, December, that dollar shall continue to be bullish in terms of technical analysis. Maybe for the pair like GUEU, we can have a continuation of being bearish, but that is not only like a fundamental reason independent itself. We should also have tried to rely on the technical analysis. But however, so far, the Federal Reserve is working so hard to rectify the economy and to bring the economy back into its states. All right, guys. Thank you for watching. This is GATOSE FX with your mentor, Mr. GATOSE, myself here. Until we meet next time, we are going to discuss about these fundamental issues and technical issues as just have been reported by the legal authority, which is our Federal Reserve of America, when we are talking about the USD. But once we talk about other currencies, I will just come up with another podcast talking about how do the governor of the central bank try to address the economic situation by imposition of monetary policies based on the current economic situation. So make sure you subscribe and put your comment to GATOSE FX. Thank you for watching and listening. Until next time.